Turn to Apple. I think they were late to the game with their HomePod, and now it's getting disappointing reviews. Gene Munster, Loup Ventures managing partner, joins us now. I have to say, Gene, that Amazon is winning this battle, streaks ahead of Apple. What do you say?
Well, from a market share, you're right. They have about 70% market share of the smart speaker market. But I think if you fast forward a few years from now, the winner, surprisingly, will be Google with Google Home. And the reason, Stuart, is the quality of the answers, basically how smart is that smart speaker. And I want to try to quickly put into perspective how smart these respective smart speakers are. I want to give credit to our Loup Ventures team for going through and asking 780 queries to these devices on Friday. But the bottom line is HomePod, when you ask questions, I got it right about 52% of the time. That compares to Alexa at 64% and Google Home at 81%. So, Stuart, my answer to your question is I think Google Home is probably going to be the long-term winner in terms of market share in the smart speaker market.
But you've often said on this program that these home speakers are the most important new development for expanding computerization into our everyday lives, and that remains a fact, does it not?
It does, and the reason is that how we interact with machines is changing. In the past, we used a touch screen or a keyboard. In the future, we'll use voice is going to be a big way to do that. And so it's critical that all these companies, whether it's Google, Amazon, Microsoft, or Apple, create these voice experiences. And so that's the purpose. Apple's done a good job of saying this is about being sound quality, but the reality is they really want to nail the voice part of this and the user interface.
Okay. Are we going to find out today, because it's their shareholder meeting at Apple, are we going to find out what they're going to do with their $285 billion worth of cash?
Unlikely. The question will come up, but they're not going to say anything. And the reason is that they reserve that for every year when they report their March quarter. So it's probably the first couple days in April. They're going to disclose that. And just give you some context about what to expect is after they've paid their taxes and repatriation, Apple will have somewhere around $230 billion in cash. We expect that $70 billion will be allocated over the next few years to share repurchase. So this is them buying shares back. That can actually lift the stock, continue to lift the stock. They'll probably give a one-time dividend around $12 billion, and then they may do a little bit of M&A.
Well, that's good news for shareholders, because if you buy back your own stock, as you say, stock tends to go up. Certainly put a floor under the thing. And if you're increasing the dividend in a one-off special, that's, again, an inducement to buy the stock. So you think that this move will put a floor under Apple around 160?
I tend to think so. And just to put the numbers a little bit of a finer point on it, is that $70 billion over a few years would add just over 8% to the value of Apple stock because they can continue to buy that back. And so I think that does create this floor, and it's not a pretty way for a stock to go up. It's not the glamorous blowout quarters that Amazon has, but nonetheless, it's good for investors.
Yeah, and shareholders will take it, whatever. Gene, thanks very much for joining us, sir. Appreciate it. Good stuff. Now.
Thank you, Stuart.